Hello, welcome to my channel. Enjoy the video.
Another interesting conversation on our Masterpiece forum today. We are going to talk about kingdom finances. Well, it's a blessing. So let's dig in, because today we're going to talk about a lot of things that we may not have enough time to cover, but we want to be able to peel away some of them. So Richard, I know that you focus a lot on the protecting your family. And I call it protection because I think that's what it is. But sometimes, again, in our community, it's a bit difficult for us to think about that protection, right? We protect our cars when we get to it, right? When we get to the US or to somewhere else that is required, we will protect our car, we'll protect our house, or we'll buy a rental insurance. And we don't think too much about it. But when it comes to protecting our loved ones, sometimes we struggle with it. And it's more like a challenge for us to wrap our head around it. So I want us to talk a bit about protecting our loved ones. What does that involve? What does that look like? That's your area. Walk us through that.
So you're absolutely right, Tina, because when you're right on the money when you say protecting your loved ones.
Mm.
The one thing that is we are assured of, and that is absolute in each and every one of our lives, is that it's taxes and death, right? We're all on a journey in life, and we're going to pass. But once we pass away, we are no longer here to worry about the issues, right? So
Yes.
life insurance, when you take it out as a principal or as a parent or a husband, it's a love offering. To put it in layman's terms, it's not about you because you will no longer be here. So that is the life principle. The life principle is that it's a love offering. You are thinking beyond yourself.
Wow.
And then I guess the second stage, or the semantics, it's protection for yourself too, because once you're gone, there are some things that need to happen, right? So
Right.
you are protecting your family from the stress of what are we going to do? Funeral costs, repatriation. Some of us want to be repatriated back to our motherland.
Mm-hmm.
Things come into play, and the first thing that strikes out to me is that it's a love offering. You are actually thinking beyond yourself and your loved ones, but also in my industry, in my work, when you talk about life insurance, one of the questions we say is, if you, God forbid, something happened to you today, Tina, and you did not make it back home, would the things that you would want to be in place for your family still take place? So it's protection in that.
Right.
Your spouse or your loved ones should not have to move home because you have passed away, even if you're the breadwinner. It's
Right.
protection in that they shouldn't even have to go to work to that extent, because especially the younger people, and most of us who are still what we consider young, if you're below 50 or below 55, you actually have an asset. Your health and well-being is an asset, because if you were to pass today and life insurance works correctly for you, you actually leave your family in a better financial position than they were before you passed. Of course, money cannot replace a human being or human life, but financially speaking, your kids should still be able to go to that university or college they wanted to go to, or even better.
Yes.
You can't kill their dreams to go to college because dad's no longer there, because mom's gone. You want to protect their dreams to say, okay, mom's gone, but guess what? They can even go to that Ivy League college. Mom's gone, but we don't actually have to move house and sell our property. Dad's gone, but guess what? Mom or the wife doesn't actually need to go to work. A lot of people take time off. Some people take a year or two off work because their loved one passed. So those are the kind of things you're protecting.
Wow. Wow. So I think that is really important. But for us as Christians, I want to bring it a bit more closer, because when you say it's a love offering, it's funny to say that. Christians, rather, sometimes, at least in our community, we don't see it as a love offering. And I don't know if it's just being selfish, but it's not something that we see as love for our friends and for our family, that we put in place these measures and these things that will help us protect them. But we rather see it more like, oh, God is going to take care of us. Oh, God is going to take care of the kids. I mean, how do we change that mindset? Because I mean, yes, God will take care of us, but He's given us wisdom to do the right things, right?
Right? There's a very thin line between faith and being unreasonable, right? So, so let's take it a step back. And I'm glad you brought the Christian angle to it.
Right.
So we, being Christians, are a little Christ. We are being Christ-like.
Mm.
So let's go to our Maker. God is love.
Yeah.
And what did God do? God so loved that He gave.
He gave.
It's a self-sacrificial or love offering. One of the, if you really want to see where the love is involved, it's about giving. It's about thinking beyond yourself. So
Right.
Christ gave His life for us, even while we were yet sinners. So bringing it to the life insurance aspect, I've met many men, especially the guys from Africa like me, that complain and say, you know what? I'm taking out $1 million worth of insurance. If I die, my wife's going to marry a younger guy, and they go, and. That is so self-centric. You're focusing on me, me, me. But if you take a minute and stop and look outward and think of your wife, think of your husband, think of your children, now you are giving. It's not only about me. Yes, if I pass away today, sad as that might be, I want to give Florence and the children a better chance, even without me financially. I know, I stress again, there's no way that money can replace human life and relationships.
Yes.
They're just two different realms. But let's be honest, financial considerations are really important. And that's what part of the peace of mind and helping them to carry on will come from. So it is giving. So connecting it to my Christian brothers and sisters, think of it as your offering to your family. I can even take it further. Those that get it, I have clients that actually get this principle. It's a life principle first. If you can connect the dots and get it, I have parents or mothers or fathers or grandparents, excuse me, that actually go to their children and say, kids, guess what? I don't have any money or any inheritance to leave you, but I have health right now. I am 61 years old. I'm giving you the opportunity to cash in on my health, where I can take out a life insurance policy, but I don't have the money to pay for it. If you guys decide you can pay for it, I'm happy to use my life and you guys pay for it. Then I have had a situation where a family, when the mother passed away, the kids were paying the premiums and they inherited $500,000 off their mother. Of course, in our African culture, that may be taboo. In our Christian, we need to change our thinking as Christians. You know, the Bible says the children of this world are wiser than us Christians. There's a verse that says that because we feel like we're taking advantage, but I think if you really think about it, it is actually using the tools you have for the better good. I think there's no greater love than one should give their life for somebody else as Christ did. So in this example, so kids can actually pay premiums for their parents, knowing that they're going to die one day, but actually that leaves them something in the form of a death benefit that is not to cash in, but something to leave the family in a better place. And those are people that actually get the whole concept. They actually get the concept of life insurance.
This is really good. That is really an important thing that we have to think about. But, you know, when we talk about the life insurance, you know, I think there are so many things that we have to, you know, put in place. But let's talk first about life insurance and what types of life insurance do we have out there?
So there are basically two types and two groupings of life insurance, Tina. I'll break them down to two. The first group is what I'll call term life insurance. And the second group is permanent life insurance.
Right.
And there's so many moving pieces, but I'll do my best. Like I told you earlier, we could be here all day.
Yeah.
But let me try and go through this real quick, and I'll try and use layman's language. The main difference between term life insurance and permanent life insurance is what it infers. Term life insurance covers you for a specific term.
Right.
We like to think of it as a safety net. Term life insurance is what enables you as a husband and a wife, as a mom and a dad, to sleep at night. You're actually buying security to sleep. It's relatively speaking, it is less expensive, much less expensive as permanent life insurance. And to me, that is the first place to start. You
Awesome.
ask when to start. You know, those that are fortunate enough, as a kid, your parents take that out, but probably not for children, probably not so much term. But anyway, another way to put it is that to give you guys illustrations and visuals. When it comes to life insurance, consider term life insurance as renting. I'll put it in a real estate. You're renting. You need somewhere to stay. It's not your house, but you're renting. You have a place to lay your head and where you can call home. Permanent life insurance is like buying a home. It's yours. You have, even though you may have a mortgage, you're paying for it, and you end up with some equity in that house. The difference being now you have some value, cash value inside that contract. So another way of looking at it, term life insurance is renting. Permanent life insurance is you owning, you either buying outright or taking out a mortgage. Now, the important pieces that are in life insurance, term life insurance, I'll focus on that for half a minute, is that there must be an insurable need. So that's why you cannot take out life insurance on your neighbor, or or your cousin's sister, or your aunt's friend. Insurable need, and there must be an insurable need in terms of the relationship. But what term life insurance does, they are, and when you go out there, people, if you're listening and you go and shop for term life insurance, one of the most important things that you must look out for is the term. You hear so many commercials on TV. Oh, we can get you $500,000 for $30 a month. Yeah, and people jump up and down. Sometimes that term is only 5 or 10 years. What that means is that if you do not die within that term period, that 5 or 10 years is gone. So term life insurance pays out if the insured passes away during that stipulated term. Sometimes you have these insurance companies lowballing and coming in low, and you don't realize that these are increasing premium life insurance. Every year they jack it up, or every 2 years, every 5 years. So they come in low so that you commit. Personally, I'm a great believer in term life insurance. There's a place for term life insurance. What you want to do is get the longest term possible, but make sure that your premiums are fixed.
Yes.
So it's a level premium term. And the longest, in my experience, the longest term you can get on the market is 30 years.
Yeah.
So for 30 years, you sign up and make sure that your premiums are level.
Okay.
I just want to share a quick fact as well here, which people may appreciate or not. Of all the billions of dollars in life insurance, in term life insurance in the world, specifically in the US, I think it's less than 7% actually pay out. Less than 7% of the people actually die, and the contracts pay out. That's why some people say, well, 7%, I'm not going to take life, but I'll caution you, because you would be that one out of the 7. That's how life goes, right? But it gives you peace of mind. You can sleep at night. It's a safety net.
Wow.
That's what term life insurance, I think. Permanent life insurance, on the other hand, there are so many different types. And just as a summary, you have insurance that is governed by interest rates. Okay, so the main difference is that within that life insurance, in permanent life insurance, you now have a cash value. The whole idea of permanent life insurance is to take out a policy that will outlive you. That means, remember, term life insurance is 30 years. What happens after 30 years? Unless if you have a renewable term life insurance, or where you can actually convert, you can convert to permanent life. That's a really, really important piece in your contract. Make sure it has that box where you can convert later on. So permanent life insurance, generally speaking, it's life insurance with a cash value inside it. But for the purpose of understanding this, it's life insurance. The idea is that it will outlive you. You will not die before the end of the term. You want life insurance that will outlast you. But secondly, since it's going to outlast you, you want life insurance with a cash value sub account. And so when you're looking at life insurance as a whole, there are two things that you consider. Well, are you looking for death benefit, which is what term life insurance really zones in on, death benefit? Or permanent life insurance brings a secondary goal, which is cash value. So you can use it as well to be a source of cash down the road. So to simplify it, you have a cash value inside your life insurance. So there's insurance that's governed by interest rates. There's insurance type governed by, or they grow by dividends. So it's really important to know which company you are signing up for with permanent life insurance, especially if you're talking whole life. When you talk about whole life, that policy growing is contingent on the company being able to pay out dividends. So you can go and get a really cheap whole life policy from a company that does not pay dividends, or that's a new company. You're taking a big risk.
Wow.
And then there's also permanent life insurance where that cash sub-account value can get invested on the market, on the stock market. For those that are looking for the cash value to really grow, if you have time and you're willing to take the risk, you can have a life insurance policy where the cash value is actually invested on the market for you. And everybody knows, like in the last 10 years, the market's done wonders. We've been on an 11-year bull run. So those, generally speaking, are the three groups of permanent life insurance. And many companies do it differently. But now it means you are going beyond just the death benefit. You could possibly be looking at investment as well.
Wow. So then if we're hearing like a lot of things, but then if you wanted to get life insurance, what are some of the key things that you should look out for? I know you mentioned that the company as well, but what about you as a person? Do you need certain things? Because sometimes we hear some of these ads that will say, you don't need you don't need a medical exam. You just sign up and all these. What are some of the things that we should look for that will not like, will be red flags for us, or important things to look out for as we're looking for life insurance?
So remember, life insurance contracts, they are aleatory contracts or aleatory agreements. Let me explain what that means. It literally doesn't make sense, because when a life insurance company signs you up, Tina, and you take out a $2 million life insurance and they issue that contract, legally by law, if something happens to you 2 weeks later and you've paid one premium, they're on the hook for $2 million. What kind of a business is that?
Yeah.
So the aleatory. So what makes it workable or a good business idea is the numbers. That's why these guys have actuaries. So all this I'm saying to say that they have to have enough contracts or enough people sign up to make it worth a business venture, like for them, for the insurance company. So one thing you need to look out for is, I'm not against startup companies, but in this industry, I would warn against going into with companies that are new.
Okay.
So do your research. My company, let me just brag for a little bit, Thrive, has been around for 103 years. So if they've survived that long, it tells you something. So look for the length of time they've been in business.
Okay.
Secondly, there are business ratings. There are regulators and companies that rate insurance companies. So Thrive has an A+ rating. We are one of only 3 companies in the United States that has that. And I won't mention the other 2 because they're getting free advertised. but you do your research. Look at their rating. The rating is based upon their ability to pay out claims. How quickly do they process? We have in our industry stories of people waiting for 2 months for that check to come. You don't want to go through that when you're under stress of losing a loved one. And I think what you got to look out for and know is what type of insurance you're getting. Know that whether it's permanent or term. If it's term, know for how long. The questions you must ask is, at what stage will my premiums change?
Okay.
That's a really good question to ask. If ever, will my premiums change before the end of the term? And also, what you might want to ask is, what are my options? What are my other options within the same company? Because sometimes, as salespeople, we may promote the higher paying because we get paid commissions. You know that.
Yeah.
I might push you towards permanent life insurance, which is really much, much more expensive than term
Yes.
life insurance. So if you're a parent taking out insurance for your kids, you must know what you're after. I mean, there's so many uses. You can use life insurance in lieu. It's a really, really popular thing that's happening these days. People are moving away from 529 college plans because those are restricted. But you can actually use the cash value in life insurance for your kids to pay for college.
Wow.
It's just an example. If you are a young couple that's starting out, and I'm generalizing now. If you're a
Okay.
young couple starting out, you've just been married, you're starting a family, starting to have kids, or you have young kids, term life insurance makes more sense because what you want to cover is the liability. You want to cover your mortgage. You want to cover income replacement. And
Wow.
so you would like to. So one way, quick calculation. Here's an idea for everybody out there. How much life insurance do I need? Look at your career and say, okay, today I earn X amount. If I'm to work for the next 20 or 30 years, at today's salary, how much am I going to make? Then you work backwards and say, that is what we call income replacement. And if that is not adding up, another way is to look at your liabilities. Young families, they usually have large mortgages. Your biggest bill or debt is a mortgage. What you want to do is look at your big liabilities, list your mortgage, and try and picture your kids. If you have 5 kids, try and picture your kids going to the most expensive colleges. How much would that cost? Even state's tuition on average is about $25,000 a year. For 4 years, that's $100,000 per child. So if you have 4 children, that's $400,000 for education, and this is just their undergraduate. What they're going to do postgraduate. So it's not unreasonable to factor in about $200,000 per child for education.
Wow.
Then you consider your mortgage. You can consider your car payments. You consider, if you're young, I generally say, people say $1 million is a lot of money. If you are below 30 or below 35, term life insurance, and you live in an average home and you're both working, $1 million worth of term life insurance is not a lot of money.
No.
That's your love offering.
That's your
But
love
it's
offering.
contingent on your health. It's contingent on where you are. Issues like BMI, body mass index. So those, and so that determines how expensive it is. So, but most young families, you go for that 30-year, as long as you can, 30-year level term contract. You know that don't have to go in and do term life insurance again. But if possible, make sure that that contract is convertible, so that down the road you can convert as your kids leave the house, as the house is paid off, your liabilities are falling off. You convert certain sections to something more permanent, because the next important thing would be your retirement. And now you would want some cash value in life insurance for your retirement.
Wow.
And everybody's in a different space. Everybody has their own trajectory, but in terms of what I see in my day to day, younger couples have a huge amount of term life insurance and no permanent life insurance. As you transition and your kids grow, you end up having a small portion of permanent life insurance, which you add to as you go along, as cash flows can allow. So I, for one, Florence and I, we started out with a big term life contract, and we're now shrinking that, where we are adding more to our permanent life insurance. As our kids leave, we have our second one going to college now in the fall. So we are thinking, okay, what about us? Because we are now thinking of retirement. These kids may not look after us like we would look after our parents. But then there is, life insurance is so beautiful. You know the most beautiful thing about life insurance, Tina? And I know we may not touch on estate planning. It's the only, if you consider it an investment, it's the only tool in your investment toolbox where you will be able to pass assets to your beneficiaries tax-free. Life insurance is the only one. Everything else is taxed. It's the
Retirements will
only
be
one.
taxed and
Yeah.
everything, but your life insurance is tax-free.
If something happens to you today, your beneficiaries are going to get that check tax-free. And then no questions asked.
Amazing. Amazing.
Yeah.
So then, Richard, you said something about health being important when you're getting a life insurance, right?
Mhm.
So does that mean that if you wait till you're sick or something happens, you are not insurable?
No, not that you become not insurable. When I talked about health,
Mm,
these are the factors that the life insurance companies consider, because they are looking at you first to say, how do we rate you? They look at your age. So the difference between the example I can give you, if you have a life insurance contract for a 1-year-old and you are paying $100 a month, that will probably buy them $3 or $4 million of term life insurance. And somebody who is 60, my understanding is that if you are 60, the most you'll get is a 20-year term, if that, and that $100 will probably only buy you 50,000 or less of death benefit.
yeah.
Because these guys do their math, actuaries work backwards. It's a little bit morbid, but the actuaries actually know that this year so many 35-year-olds are going to die. They've done the math. They know
Wow.
that next year so many men in this age group are going to die. So they work backwards and they know that. So your health is important. So when you do the application, if you feel like in 2-3 weeks you could lose 20 15 pounds weight and lose those pounds, because your weight's going to be a factor. But there are no guarantees in life. If you
Yeah.
are somebody, why we say get it early, some of the factors that they consider is, do you take prescriptions on a daily basis? What's your health situation?
Mm,
Well, if you take daily prescriptions, it's going to be more expensive. So if you take a 40-year-old who takes medication for blood pressure, medication for diabetes, and somebody who's in good health, you'd be surprised that for the same amount of coverage, the healthy one is paying $40 a month. The unhealthy one is paying 85. That
yeah.
is that is business. These are the semantics now. So
Mm,
that's why we say get in when you are young. The younger you are, the better. A quick story. I have a work colleague who works out of my office in his 30s, early 30s, took out $1 million worth of term life insurance. In his 40s, he was diagnosed with cancer. So yes, there are places where you become uninsurable. There are terminal diseases. If you are terminally ill, no life insurance company will give you insurance. So if you can't have had a record of cancer, sometimes they also look into your history, family history. It's not
yes.
just about you. Or did your parents have diabetes? Did your parents, were they obese? Any uh, traces of generational illnesses? This is how they determine how you're rated. So
Mm,
going back to my friend Troy, he had cancer in his 40s. He beat cancer, but now he's uninsurable. Thank God he had that $1 million. Because when
yes.
it's convertible, it means that you no longer have to go through health and underwriting. You just
Yeah.
convert at whatever rate you got when you were in your 20s or 30s. They convert. Of course, they factor in your new age, whatever your age you are now, but you just convert. It means that you have secured your. So I've met people that have said, "Well, I'm still 28. I'll take out life insurance when I'm in my 30s." Well, firstly, there are no guarantees in life. Second,
No.
there's an example that you're locking in your good health now.
Yes.
And the other beautiful thing about term life insurance, when you don't need it and don't want it, you just
Mm,
stop paying your premium. That's as simple as that. It can go away tomorrow. You
mm,
just stop paying your premium. So uh, health is really, really important. So first of all, make sure you're in prime health. And also another tip, if when they say you're going to do a physical, sometimes they send somebody to your house to draw blood, to draw urine, the underwriting process. You really want to make sure that you're in tip-top health. You're drinking lots of water, and it's always better to have that person come in the morning after you fast for at least 12 hours. Don't eat. So the night before, make sure you have your dinner by 6 or 7, and
okay.
let them come in the morning when your blood samples will be at their best.
Okay.
You know, if you have a heavy breakfast and this person comes in and draws your blood, they're going to tell you that you have high cholesterol levels. It's going to
Yeah.
put your premiums up. So these are small
Mm,
tips, semantics that we can discuss. Uh, but certainly your health. So sometimes, and there's an unfortunate situation here too, your BMI, your body mass index. You know, some of us, we're just big, you know, especially we're big boned. I have a friend of mine. He goes to the gym. He's a gym instructor, and he came in rated as standard. He runs marathons,
oh
and he
my
says, "Why are
goodness.
they rating me as standard? Look at me. I'm fit. I'm healthy." Unfortunately, life insurance, they consider your body mass index,
Yeah.
and sometimes if you just happen to be big and heavy boned, that puts your rating up. So
Wow.
yeah, those are some of the things to. But just remember that there are no guarantees in life. Don't put off until tomorrow what you can do today. So I would caution people waiting to say, "Well, in 2 weeks' time I'll be in better health." There's no
Mm-mm.
guarantee.
Just started early. I like that idea because I think a lot of us just push it back and all that. And to some of the younger people who are starting out, you stand a far better advantage. You're just getting into college or even just started your first job in college. Think about it. And it's cheaper when you start out early, right? It's
Yes,
far
absolutely.
cheaper,
It is
you
much
know?
cheaper.
It's far
It's much cheaper.
cheaper. Like the more you wait, the more it becomes expensive to buy it. So, I mean, you guys stand an advantage than a lot of us who are more in the 40s now. But for those who are in their 40s, I mean, is it like you said, we may be having some more, things that are coming up because people are growing and we still keep postponing it. What
Yeah.
advice would you give people who feel like it's a bit too late? They could have done this and they didn't do it, so they keep postponing it. And I'm not even talking about the younger people. I'm talking about the older people who are now more, in the, you know, getting older and
Mhm.
pushing it.
So in my work, I'm very privileged. I meet a lot of people. We
Yeah.
hear stories. There's
Mm,
nothing heavier than carrying a check, because when you build relationships with your clients,
yeah.
and I've sat in meetings where a young father dies, leaving behind two daughters and a wife, and I've been in a meeting where the widow is crying and she's heartbroken, and she turned to my colleague and said, "Are we going to be okay?" And I was happy that my friend sitting next to him said, "Yes, you are going to be okay." Isn't that
That's
gives us so much
comforting.
fulfillment in our job? But I've also heard stories where people in my circle
Yeah.
have turned down life insurance. They said, "Well, there goes Richard, the life insurance guy. There we go again. You're just trying to sell us life insurance." But you know, for me, sometimes I bring it up so that I can sleep at night. I
Yeah.
would hate to find out that somebody passed and I did not have that discussion about coverage. Because
Mm,
sometimes, especially when you deal with your friends and family, you are afraid to say, "Oh boy," if you start talking about products and life insurance again. But as you get older, you will realize that, A, life takes a new meaning. It's no longer about you,
no.
it's about the other people, right? And
Yes.
once you hit 40, people say you're getting over the hill, right? You start thinking about, I'm going downhill, from here is downhill. So you start thinking about other people. Secondly, you also start thinking about the cost of these things. Like you
Yeah.
said, Tina, now if now you're in your 40s and now you need permanent life insurance, and $100,000 of whole life is going to cost you $250 a month.
Mm-mm.
This is very common.
Yeah.
I've sold insurance to people in their 60s, and they're paying almost $300 a month.
That's ridiculous.
There's so much regret because now they've realized the value of the importance of it. And yes, is there still a place in that puzzle for them? Yes, but it could have been a lot different.
Yeah.
Um, I hope you're not getting too much feedback. There are a lot of people in here now. Is it still okay?
It's okay. I can hear you. All right.
Right.
Yeah.
So
Yeah.
uh, it is a sacrifice. It is a love offering.
Mm,
The sooner you realize that it's not about you, Yes, there can be a place too for you, especially when you're talking about retirement planning, and if you're talking about funds that you tap into in your retirement or after you finish working, because again, it's tax-free income for you inside that life insurance contract. But yes, if there's nothing else that people take away, do it today.
Do it today.
I'm wide open to, but even if it means you go talk to somebody else, it might, you never know why God put you in this space where you heard this today. It's because when you really think about it, Tina, when kids coming out of college, especially women, it's cheaper to insure women, you know that that man, because the idea is that women live longer and they'll pay more premiums. That is just the truth. And some of these 24, 25-year-olds that take out, it's like a joke. They take out $1 million for 30 years level premium, and you run the numbers, and they're paying $50 a month for $1 million worth of coverage. $50, $60 that will not change for the next 30 years.
Amazing.
It's a no-brainer. Because that's the kind of money we go out and eat and spend, right? Without thinking about. How many times do we spend $50, $100 on less important things?
True. And Richard, as you are there, let me add one more question to this, because sometimes we even have the life insurance, but we do not set our beneficiaries correctly on that, right? So let's talk about that a bit, because some of us have life insurance. We haven't reviewed our beneficiaries. We may not even be on good terms with some of the beneficiaries that we added a year ago or 10 years ago. And it's always good to go back and review, right? To see, do I still want this person as a beneficiary? And do I keep, some people have even separated or divorced, and they still have a divorced spouse on their beneficiary list, and it's like, oh, I didn't think about it till something happens. Let's talk about how important beneficiaries are to the policies that we have.
So generally speaking, people have their loved ones as remember, it's a love offering as their beneficiary.
Mm-hmm.
So you can actually name an entity, that a non-individual, as a beneficiary, but that's a discussion for another time. Now we're talking estate planning, but beneficiaries, it's really, really important that you be on the same page if you're married. I've run into situations where a husband puts the mother as a primary beneficiary. I'll say no more. Even if you're separated, some people want to put their kids. Well, you know what? I don't like your father. I'm going to put you, my son, as the primary beneficiary. Life insurance, like any other legal contract, if these kids are below 18, in some states below 21, they're considered minors.
Right.
Create another problem.
Yes.
That they will need somebody to stand in somebody with their best interest. So you're creating another level of expenses when if and when this contract should pay out. So, and also other people have said, well, my wife is the primary beneficiary. I don't need to put anybody else. Not correct. No. Because remember, God forbid you both could die in a car crash at the same time. So you have to be thinking. So for those that have really, really young kids, I pray and hope and say, think of somebody close to you. If you're family, like a grandmother, one of the parents, I'm talking about grandparents, would be a better person to put as first contingent beneficiary than a 3-month-old child. Yeah. Because there will be custodian issues down the road. And for some of us who are immigrants, we don't have that extended family sometimes. So, interesting story. Sometimes you just suck it up. If you have somebody you trust to that level, you can have them, if you know that they will have your children's best interest at heart. But, God is so faithful. I mean, like I've always checked in on my beneficiaries. These children grow up real fast. Now, in my case, now I'll have 2 of them that are older than 18. So once they are 10, 12 years old, I think it's okay to have your children as first contingent beneficiaries. So I really encourage people, if you take out life insurance, please put your spouse as primary. And then first contingent beneficiary considers your kids if they're old enough to understand, especially teenagers, they get it because
Yeah.
we don't check on this every year. And when somebody's 17, it goes to probate before a judge.
Yeah.
A 17-year-old is just a year before they get to that stage where they can make decisions. But can you imagine if you have your life insurance and both parents pass away, and your kids are 3, 6, and 7?
Mm-mm.
It actually creates a big problem. This is one of the unseen costs of immigration. we can't do anything about it. But what would happen is now they would set up, go through probate. Your relatives will be trying to get a ticket from Africa to come get that money here. and, and 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 another good idea, what we have done too, is if you have siblings, even though they're not in this country, you must share this information. And maybe this is another African thing where
We
where
don't.
they don't share. You don't even share with your spouse to say, I have this life insurance. You're shooting yourself in the foot. You must tell your spouse. I'll give you an example of an extreme case. A gentleman I just wrote life insurance on for. He's in the middle of going through a divorce, and he put his soon-to-be ex-wife is the primary beneficiary. And I said, how do you do that?
Yeah.
You know what he told me? Even I learned something new. He said, I'm doing it for my kids. I know she loves our kids.
Wow.
And here I am thinking they're going through a divorce. You're still putting her as primary. Then he says, one thing I know that we still both love our kids, and she will do the best for our kids.
Absolutely.
And that was a culture shock to the African me.
Oh, it's different. Yep, for sure.
Yeah.
So I know we are coming up the top of the hour. We couldn't touch on our retirements. We couldn't talk about the charitable giving.
We have so much to talk about. Yeah.
Yeah, but I think that the life insurance is a good thing that we need to have. But let's add a little bit on with the estate planning, right? So normally your life insurance will be part of that estate planning portfolio that you will create. And so you would have like a will or your medical, thing as to what to happen to you and all that.
The power of attorney, yes.
The power of attorney and all that. So those are things that it's still very difficult for us to execute and create. I don't know. It's like, I don't know how we change that mindset. Like have a will in place, especially knowing that we have so much extended family all over the world and people can come in from everywhere to claim whatever they want.
Yes.
Have a will. How important is that?
It's crucial. So estate planning is another whole discussion is on its own. What I will highlight is that some states are called marital states. Just check what the laws are in your state, wherever you are, where, some states, even if you live with somebody for 10 years, that's just as good as being married. Some people think, well, he will not get anything. I'm not married to him. No. Some states, due to the fact that you've lived together, it becomes, they're treated like a spouse, a legal spouse. But, as with anything within financial planning, yes, the estate planning or the legacy, we call it the legacy piece. That is really so crucial. Because if you look at it firstly from just love offering, let me connect it to the insurance piece.
Yeah.
You leave a legacy and there's an opportunity to create more wealth. We're talking about generational wealth. So I hope people in the audience will try and understand this. Generational wealth that increases from generation to generation. So the Rockefeller Foundation, part of their wealth was grown through life insurance. Every time a baby is born, they take out $1 million plus life insurance on a baby. On a baby owned by the foundation. And every time one of the family passes away, it creates tens of millions, if not hundreds of millions, in the death benefit. So it becomes generational. Let's change the way we think, guys. Don't say that you wish me dead. If I died tomorrow, Tina, and I could leave my family a few $1,000,000, good for them, because I was going to die anyway.
I was going to die anyway.
Let's have that mindset. So plan to create wealth. Plan to be tax efficient. So if you're thinking beyond yourself, how can I pass on some of my assets tax efficiently? So even people that don't have children, you talk about charitable giving.
Yeah.
Charitable giving creates tax advantages for you now. So we have people here that don't have children or don't have physical beneficiaries, but they give to the cause that they believe in. Even whilst you're still alive, you can make distributions to charitable organizations that give you tax deductions that are advantageous now. They are QCDs. They are. So I'm assuming the audience is primarily Christian.
Yes.
Look at what you can do through Christian-centric organizations. And sometimes you'd be surprised to see that when you talk about assets, maybe not life insurance, sometimes if you die at the wrong time, in the wrong place, when your assets are not aligned correctly, you end up paying, you are gone, your first kid gets 33%, your second kid gets 33%, and the IRS gets 33%. Doesn't make sense. I've seen those situations because you have not done estate planning and proper planning for your generosity. What you also got to realize is that when you are planning for your legacy, even when you are younger, some people think we don't have much assets now. A great idea would be looking into setting up a family trust. Set up a family trust whilst you're young. That protects your asset. How does it? So your home, all your assets belong to the trust, right? And when individuals die, the trust carries on generationally. You just appoint different trustees. Whereas if your assets are in the individual name, if your assets are under Richard and Florence, when Richard and Florence dies, that big IRA that you think you have money in will go through probate at some stage, or the IRS will be waiting to take their taxes. Even your home, our first home, we always put in our names. Oh, I've got a house. But I encourage you, the next house you buy, consider putting it in a family trust, so that even if you pass, you don't have to pay capital gains because they sell that house. That asset stays within the trust, and it's passed down generationally without having to pay any taxes. It's incredible.
I like the idea about the generational wealth. And I didn't know about the Rockefeller Foundation and how it all got into being. This is awesome. And that's why I feel that planning early is key, because a lot of us wait and wait and wait. Some of us watching, we have kids that are maybe 6 years, 10 years, 11, 12, and we are still waiting. We don't have life insurance on them yet, right? And now that we are thinking more generational, legacy, I think it's a good takeaway for us to go back and think about, what is a family trust looking like? How can we even set up one? I know a lot of us don't know much about it, but it's something that we can learn and we can explore. And I know that our time is almost up. I want to take a few questions if you have questions. Again, we couldn't get to a lot of things that we wanted to, but that's why we take one thing and we try to get into it as much as we can, and we'll come back, God giving us life. Next year, we'll talk about finances again, and we will be able to talk about the other aspects of finance. But if you have a question, I see Rosemond, you are here. I see Reverend George is on, Helen. I think I saw Auntie Rita as well. And then a few other people. I'm not seeing all the names. So if you have questions, I know we are coming on the top of the hour, but I want to see if you have questions and Richard can help us to answer any of them. We want to do that. But Richard, I think this is...
Can I say one more thing? I mean, this is, I know it's not, this is the average trajectory of an African immigrant. I'm talking in financially.
Mm-hmm.
We all know it's a struggle to immigrate.
It is.
We find out that it's even harder to assimilate.
Yes.
We may not even be accepted. A lot of us are working jobs that are far below our worth and our education and our capability. So it's a fight. It's a fight. Sadly, then, we shoot ourselves in the foot if we don't think generationally and don't give our children a better starting place. Because if you don't do things right in this fight to get ahead and to catch up, so we are in our 20s or 30s, we're competing against peers at our job that have lived here all their lives, that have generational wealth passed from their great grandparents. We're trying to buy our first house. That's why sometimes maybe our judgment is clouded and you think life insurance for what?
Yeah.
The average immigrant or African, I'm talking African here specifically, you spend so much time, maybe it takes you 10, 15 years before you get established. Then you buy your own home. And then we don't invest for the future. We literally spend our money on things that are not so important. And we spend all the money on ourselves. We don't have life insurance. We don't have anything to pass on as a legacy. God forbid, then we die. And we can become a liability to our very family we're supposed to be lifting up. We start opening GoFundMe pages. It happens. Let's be real, it happens. You know, even within the Zimbabwean community. Every week there's another GoFundMe.
Yeah.
And you look back and you think, we failed.
We failed.
The very fact that we had an opportunity to come here should have been an opportunity to change thinking generationally. We should have been an asset.
Yes.
And like you say, I actually tell people that are close to me, take out as much life insurance as you can get. If you don't die, if it's term life insurance, thank God. If you do die, have enough even to send back to your siblings that are back home. Go and change your life. You know, if an uncle or your parent who is still in Africa gets $20,000, their life will never be the same.
Absolutely.
So when you have your discussions with your spouses and partners, husbands, when you're factoring how much you need, because it's relatively cheap, especially if you're young. Remember that. So I have 4 siblings, and I've told Florence, there's a certain amount that if I died young, please send a check to my siblings, X amount. I've told her that. She has told me the same, but she has 5 siblings. So, although we don't tell them, of course, right?
Yeah.
you don't have to advertise that. But what a gift! It's that whole thing about giving. It's about giving.
Yeah.
Because that $20,000 will change somebody's life and their kids and their generation for the rest of their life. So your single life is touching lives generationally.
I love that.
Sorry, I just thought I'd throw that in.
No, I think that is awesome. That is really good that we hear that generation after generation being blessed. I know families here that when their children are buying their first home, they give them this seed money and they say, go ahead, we are sowing 50,000, go buy a house. You know, it's so beautiful. It's so beautiful. Some have lands and they have it that goes after generation. And lands, I'm talking about huge lands in America, you know, that they give to the next generation and you can build on it, but it's for the family and it's a trust. We can do better. We can do more, right? So let's not feel the next generation. They are looking to us. They are waiting for us to do our part. It may not be so much, but if we are intentional, we can still do something with it. I have a question quickly before I let you go, Richard. It says, can we create a will on your own or do you need a lawyer?
So there are some templates online. I would encourage people to get legal advice.
Yeah.
There are some because the last thing you want to do is create one on your own and it's got legal loopholes.
Yeah.
You know, there are things like LegalZoom. There's organizations out there that specialize in these sort of things, you know, so I would encourage you to make sure that it's relevant to your state and relevant to your situation. Some of the things you get online are not current, and they miss out on some things that may be technical, especially when we talk about things like divorce. Then you maybe, if you unfortunately find yourself in that situation and you thought this was a slam dunk concrete will, and it turns out that it's not. It's just so. I would encourage people, it's worth you paying $250.
Yeah.
Get
Yeah.
a solid document than to take a chance on your future and your children's future and your generational goals.
Absolutely. Thank you so much, Richard. This has been great. We are so happy and blessed to hear some of these things that we are hearing. And we are hoping that we can take these and we can think about them and act upon them and change the future of the next generation, so that it won't be that when they look at us, they say, well, you came here as first generation, yes, but
the word is act. Tina, you said act. That's the correct word. We got to act. Action.
Yes. So we have to execute on that one, and we have to make changes. So let's find a lawyer. I mean, some of the my work, for instance, we do provide it through our benefits as well. You can get legal advice to create your estate and all that. So look at your work benefits. You may be able to get that also, but explore it. Don't let it sit, because again, like Richard said, let's do it today. Today is the day. God has given you that voice. He's giving you that ability. Find a way to make it happen. Generations will thank you after that, and we'll see the footprints that you left when you came around. Thank you so much. We'll see you next week for another awesome session.
Hello, thanks for watching. I hope you learned something that will help you today in your life journey. Make sure to subscribe, like, share, and come back for more videos to encourage you to become a masterpiece. See you soon.